CIMB Group is selling off its 18.21% stake in Bank of Yingkou to Shanghai Guozhijie Investment Development Co. Limited for a total consideration of 1.507 billion renminbi, which is about 972 million ringgit. This values the stake at about 1 times the price-to-book value ratio of the Chinese bank. Group CEO Tengku Zafrul said the Bank of Yingkou had been one of the company's best investment as it yielded an IRR of 17.4% and a money multiple of 3.3 times, but explains as the capital requirements for minority investments in other banks have continued to increase, the returns threshold required to justify this investment is simply too high. From the time of CIMB's entry up till the end of September this year, the bank had shared approximately 651 million ringgit of Bank of Yingkou's profits. Zafrul said that this disposal is in line with CIMB's T18 operating and capital target, but adds that CIMB will continue to collaborate with the Chinese bank in areas such as staff exchanges, product development, training, and sharing of market intelligence. Serba Dinamik is going public next February with the aim of raising 584 million ringgit. This main market IPO will be Malaysia's biggest listing in 19 months. According to Reuters, 389.4 million shares will be up for grabs with a retail price of 1 ringgit 50 cent each. However, the company said the final offer price will only be set after a book-building exercise with institutional investors in January. Group CEO Muhammad Abdul Karim Abdullah said part of the IPO proceeds will be used for cross-border acquisitions with a focus on companies with manufacturing capabilities. He said through these acquisitions, the company wants to add on to its field services and offshore capabilities and also supply parts to its clients. Serba Dinamik provides engineering solutions to the oil and gas and power sectors. Apart from Malaysia, it also has businesses abroad, including Indonesia and the Middle East. Malaysian Rating Corp sees the country's GDP growth coming in at 4% for 2017. That's lower than the 4.3% growth we had in this year's third quarter. The rating agency said domestic demand will continue to support the economy on the back of stronger momentum in private investment, which will offset a slower growth in private consumption. It notes that the lag effect of weaker job market will likely cause private consumption to moderate, while stringent credit assessment will cause weaker loan growth, especially to household. MARC also notes that at 3.5%, the jobless rate is the highest it has been since the first quarter of 2010. But on the bright side, it does not see a sharp deterioration in consumer spending growth in the near term. However, inflation rate is expected to climb to between 2.5% and 3% next year on further subsidy rationalization. The agency also thinks the ringgit has further to fall against the greenback, but the weakness will not likely continue in the medium term. Federation of Malaysian Manufacturers is cautious about the impact of a possible cumulative gas price hike by the end of 2019 due to the uncertain global economy over the next few years. In a statement, the FMM expressed its concerns about the cumulative price hike of 22.6%. The industry group said, though it recognizes that the gas cost pass-through mechanism is in place, it continues to advocate for a fair pricing of natural gas, especially locally sourced piped gas. It also wants to further engage with the government to obtain further clarity on the basis of the average base tariff determination for the next 3 years. Yesterday, Gas Malaysia said the Energy Commission had approved the average base tariff from January 2017 to end 2019. This means the average base NG tariff will be raised from 26 ringgit 71 cent to 32 ringgit 74 cent per MMBTU in January next year. Kicksing Malaysia isn't having a good end this year. In a Bursa filing, the company said its Roundtable for Sustainable Palm Oil certificate has been suspended. The suspension will last for 60 days starting today. The plantation company said the suspension was primarily due to inadequacies in providing estate contour maps for RSPO auditing purposes. However, the company reassured its shareholders that it has taken immediate action to rectify the matter to lift the suspension soon. Apart from that, it will update any further development on the matter in due course. The group's principal businesses are palm oil cultivation and manufacturing, property development and investment, and hotel and resort ownership. It has operations in Malaysia, Singapore, Canada, and Hawaii. Thank you for watching The Edge TV. We'll be off on Monday. All our programs will resume on Tuesday, 3rd of January 2017. Meanwhile, enjoy the holidays and Happy New Year!